Hello Wolfpack, we're going to be doing something a little bit different today. And today we're going to be flipping over all of the charts, right? I know this sounds a bit ridiculous. We're inverting all of the charts and we're going to be looking at it from a neutral perspective. And the best way to do that, in my opinion, you can see the regular chart here, is go to the price scale, click invert scale, flip them around and understand what's going on from a different perspective. Some people think this doesn't work. I would highly disagree with that, right? What we're going to be doing is deleting literally everything from the Bitcoin chart we have right now, looking at it from a fresh perspective, upside down to remove and eliminate all preconditioned bias we have there. What we can see is the same things are still present. We can see on Bitcoin that 28.6K, let me get it up. It's a bit confusing to get up here on this scale. 28.6K is still the critical level for Bitcoin. And we can see that what we actually have here on Bitcoin is a massive double bottom formation. Now, I've been hesitant to call this a double top formation on the regular chart. However, flipping it over to the inverted chart, it is very, very clear to see that this is a double bottom formation of some sort, especially considering that the only deviations we have from a double bottom are these two kind of impulse moves to the upside, one of which was driven by CPI numbers and the other of which was driven by irrational price action after making a new all-time high. So the CPI numbers pump shouldn't even be here, and this one was driven by irrational price action. Hence, the flat top was actually here, lining up perfectly with a double bottom formation. This was in fact a double top formation on Bitcoin, and on the inverted chart is a double bottom formation. When you see a double bottom formation, especially after retesting resistance from a neckline on multiple occurrences, right, you generally see that neckline break, okay? That is an indication that Bitcoin is going to break this neckline to the upside according to the TA, and hence that is an indication that Bitcoin is going to drop below 30K. But the critical level still remains, right? The critical level still remains at 28.6K. And until that actually happens, and until we actually break above or below, it should say, below 28.6K, it is not going to be valid, right? So we need to be waiting for the breakout to see what happens. Now, some people would say, oh, Wolves of Crypto, are you bearish? Are you bullish? What's going on? Yeah, I'm bearish macro, but what I need to say and what I need you guys to understand is that I'm neutral until something happens, because right now we're on support. And so the macro situation is we're selling into support, right? That's not a good thing to be doing. We need to be waiting to see until that support breaks, and then we can be super bearish in the market. As of right now, we're on support. Getting bearish on support, even in a macro downwards trend, is not a logical thing to do. So 28.6K is by no stretch of the imagination the critical region here. And then bringing back the rest of the analysis on the inverted chart, we can see that we actually had a macro bull flag formation. This is what I find funny, right? A lot of people would have kind of denied the fact that this is a bull flag, right? These dash yellow lines. They would have denied the fact that it was a bear flag on the normal chart. But then you flip over the chart and all of a sudden all that bias is eliminated and it's so clearly a bull flag, right? Upwards trend, right? Consolidation, break to the upside. And this definitely still has some steam to release there. Now, deleting everything once more, drawing back in 28.6K, and then also zooming upwards, what we can see, and going into the 4-hourly chart, for example, what we can see is that Bitcoin is actually in a bit of a pennant formation right now. I guess you could say it's a pennant. I would say probably looks a bit more like an ascending triangle formation, something like that. And if we actually bring the chart back to the regular scale, this is actually descending triangle formation. Some people would say, I know Megawell says that this is a bearish pennant formation. Regardless, they are both very bearish structures. And Bitcoin, according to this structure, should be breaking to the downside within the next 4 days. Now, that's according to this structure, right? That's not my opinion. That's according to the TA. So again, if you hate my opinion, guess what? It's not my opinion. It's what the TA is saying. It doesn't have to. No, of course it doesn't have to. It can break to the upside here, and it would lead to some short-term consolidation. But the trend is very much downwards, and this is a bearish structure on support, which would mean we have to be slightly more bearish going into support. Obviously being bearish going into support isn't the best situation to put yourself in, but that's just the situation we're seeing right now. So Bitcoin is consolidating on support in a bearish structure, and it's indicating on the inverted scale that it's going to break upwards towards the nearest resistance zone, which is 24K. And on the normal scale, it's going to break downwards towards the nearest support zone, which is 24K. Moving forward to some of the macro charts, this is the 4-year cycle chart inverted. Let's bring it back to normal. That's the 4-year cycle. Let's invert it. And we can see the 4-year cycle is very interesting to look at inverted. And what we actually see about this cycle that's different to other cycles is it looks like much more of a clear bottom, right? Or a clear top, depending on which way you're looking at the scale. I'm confusing myself here. But what we see is a double bottom formation, again, similar to what we just saw in Bitcoin in the weekly chart. And generally speaking, after these bull market tops, right, what we see is we had a bull market top here, bull market top here, we see when Bitcoin breaks above the 50 SMA, we head up to the 200-week SMA. We test the green line on every single bear market bottom, right? Test the green line, and guess what? Bitcoin has broken above the 50-week SMA, it's tested it for support, and it's going upwards towards the 200-week SMA. To me, it is an absolute no-brainer. It is literally one of the most simple analysis I can ever do, and it can ever show. It is literally one of the most simple analysis I can do in the inverted chart to go ahead and tell you that Bitcoin is very likely, very likely going upwards in this case, or if we're inverting the chart back to normal, going downwards towards the 200-week SMA. And that's abundantly clear from inverting the chart. Moving forward, we've got the same chart here, the weekly chart, from a different perspective, without all the other lines, the extra lines of the 4-year cycle theory. And it's very abundantly clear here. Break above the 50, you end up at the 200 for a top. Invert the chart back around, the same logic applies. Break below the 50, you end up with 200 for the bottom. Moving forward to the total cryptocurrency market cap chart. Right, and this is an interesting one, right? Because this is actually a very important chart and it doesn't get the attention it deserves, right? The total cryptocurrency market cap chart is a chart that measures every single dollar, the entire market capitalization wrapped up in the cryptocurrency market. And so if we're actually just looking at this chart from an objective perspective, right? If we flip it back to normal, this is what it looks like. And a lot of people would struggle to understand that. If we flip it to inverted, it becomes very easy because our brains are designed in a way to kind of act in accordance or think in accordance to our personal biases. And when your personal bias as a human is that you want it to go up, you want to make money, right? That's everyone, right? You're gonna stop seeing, the things you can see on an inverted chart when you have it on the normal scale. And so inverting it is a perfect way to eliminate that bias. And what we can see is the total cryptocurrency market cap had kind of this descending line here, and we've broken that to the upside as of recent. Right? And if this was a normal scale, this small little pathetic break to the upside would never be considered enough to anyone. But somehow, just because it's this way on the regular chart, this is enough, and people think, oh, it's going to bottom out here. If we invert it, we can see that this is just the start of the break upwards, right? We're definitely heading towards something like 800 billion, and if we flip that back over, that's what 800 billion looks like. That is another drop from the current price region. 32% to 33% on the total cryptocurrency market cap chart, which would lead to probably a 25% drop in Bitcoin and a 40% drop in altcoins across the board. And if we're going back to Bitcoin and we're looking at what a 25% drop on Bitcoin would look like, this is just rough speculation here. That would be taking us downwards towards that 22K region, which of course is where the 200-week SMA is. So it all kind of adds up. And inverting these charts is the perfect way to make it add up and to understand that. Now, an interesting thing as well is this is the S&P 500. This is the last thing we're going to be looking at in this video. But before we even look into the S&P 500, I do want to take a look at the BitGet Exchange. So BitGet is essentially one of my favorite exchanges. I use it in Binance for spot trading and BitGet for futures trading. It has the lowest fees in the game, even lower than that of Binance, which is expected to be and kind of generally considered to be the lowest trading fees exchanges. BitGet is actually lower than Binance. So essentially another trading point, another reason I use this exchange, I should say, is for the access to futures. Now, as an Australian and as people in the UK as well, we face regulatory challenges regarding futures. BitGet offers a no KYC option, meaning you can actually trade futures regardless of your location. The exchange also offers over $4,000 in rewards available for completing pretty simple tasks, to be honest. If you sign up using my referral link below, you can get access to that $4,000 in reward and also that futures trading regardless of your location. No KYC, which is good for tax reasons as well. But moving forward into the S&P 500. Now, the S&P 500 or the SPX is obviously a very manipulated chart. It's very manipulated, I guess you could say, manipulated by governments and institutions as well. So this thing is never really going to abide by TA in a traditional sense. However, TA does apply to it slightly. So what we can see is that if we're looking at a normal scale, it almost seems as if this thing never stops going up. But using TA and flipping it around, what we can see is this thing has not only seen a rounding bottom formation, it's also seen an inverted head and shoulders pattern, both of which suggests, right, if we're looking at the targeted moves for these things, inverted head and shoulders pattern, from there, break above the neckline, that's the target. The rounding bottom pattern from the top to the neckline, which will probably be around there, break above, roughly the same targets there. If we bring it back to the normal scale, we can see both of these indicators here, which both the rounding top and the inverted head and shoulders pattern, or the head and shoulders pattern in general, are both targeting that price region, which is also conveniently the next major support zone. at 3,500. And so the S&P 500 is tipped, according to the TA, to go downwards towards 3,500 in the coming months. That would line up with how Bitcoin is dropping as well. And obviously those things go hand in hand. So if the S&P 500 drop, Bitcoin goes down as well. And seeing as Bitcoin is in a macro bear market and the macroeconomic situation is not very good, it makes perfect sense. So that's the video, guys. And before I even end it off as well, I do want to talk about Wolves of Crypto V.I.P. If you want to join the V.I.P. membership, click the join button at the bottom of this video below or on the channel page. You can get an altcoin trading signal every 7 days, or every second day, I should say, not every 7 days. And also a 2-hour video on market psychology you'll get immediate access to, as well as other perks. Obviously, of course, I speak about it quite often, but if you want to learn how to trade during the bear market, is the best time. Not much is happening in the market. There's not much trading going on. And so you can actually learn how to trade and prepare yourself for the next bull market. My friend and fellow analyst, Mega World Crypto, have created a Learn to Trade course, the Crypto Academy courses. So you can go to the window, cryptoacademy.courses, which is the website, and check out the information there. I'm excited to hear some more emails from Crypto Academy courses. Getting a lot of interest so far, over 50 students, all of which seem to be having a good time with the course. Very educational, one of the best courses in the game for sure. But that's the video. You can see how inverting the charts definitely kind of eliminates that bias. And you can see how inverting the charts clearly indicates that Bitcoin is not done correcting yet. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.